When you think about retirement, what comes to mind? Lazy mornings, maybe. Bit of golf. Or just, that feeling of security after working your whole life. It's often sold as this kind of golden reward, right? Time to kick back.
Mm.
But here's the thing. For a lot of British retirees right now, in 2025, that picture actually involves leaving the UK entirely. So the big question is, why? Why are so many deciding to pack up and go?
Mm.
Okay, let's unpack this. Welcome to the deep dive. Today we're zeroing in on a really significant trend, the UK retiree exodus. We're focusing particularly on the baby boomers, so people born between 1946 and 1964. We've got some great sources here, articles, data, even some personal stories, and our job is basically to pull out the key insights for you.
Exactly. The goal here is to cut through the noise, give you a clear picture of, well, the motivations behind it all, the challenges people face, and what it means more broadly. We're looking at things like the rising cost of living, which is huge, healthcare pressures,
Yeah.
definitely, plus the sort of lingering effects of Brexit and, of course, pension limitations. It's quite a mix.
And to make it really concrete, we'll be following the story of Jane. She's 72, and she actually made the move to Spain. Her experience kind of brings all these threads together. So let's start with maybe the most obvious driver, the financial squeeze. This seems to be where it gets really interesting. Rising living costs are just pushing people, aren't they?
Oh, absolutely. It's consistently the top reason people give.
And the official figures from the ONS, they really back this up. UK inflation hit 4.2% in 2025. But, and this is the kicker, the state pension, it only went up by 3.1%.
Right.
That's a real terms cut, isn't it?
It is. And that gap, it directly hits people's buying power. Think about it. The full state pension, £11,502 a year. Well, the Joseph Rowntree Foundation says the minimum income standard for a single pensioner is £14,400.
Wow.
So it falls short. And you've got 12.7 million retirees relying on that state pension. For them, that shortfall isn't just a number. It's making choices between heating and eating sometimes.
And it's not just abstract inflation figures. It's the everyday stuff hitting hard. Energy prices. Ofgem says they went up 10% in 2025. And food. If you've done the weekly shop lately, costs are up 25% since 2020. Just think about that.
A quarter increase on a fixed income.
Exactly. It's just unsustainable for many.
And that pressure mounts, especially with housing. Even if you own your home, you've got rising council tax, maintenance costs. Older properties often need more upkeep. But for the 30% who are renting or still paying off a mortgage, the Resolution Foundation found 1 in 5 are spending over a third of their income just on housing.
A third? Goodness.
Done.
Before anything else.
Precisely. Imagine trying to manage on the rest.
So Jane's story, it makes perfect sense. She found her pension just went so much further overseas. Let's put some numbers on that. A one-bed flat in Alicante, Spain, maybe 400 to 600 pounds a month. Compare that to, say, Bristol back in the UK. You're looking at 800 pounds minimum, maybe 1,200 pounds.
Difference.
Huge. Month after month, that saving adds up. For Jane, it meant covering the basics and having money left for enjoying life a bit.
Yeah, that leisure aspect is key.
Okay, so money is a massive factor. But then there's healthcare. The NHS, it's a cornerstone of British life, but the sources all say it's under unprecedented strain.
That's putting it mildly, I think, and it's definitely weighing on retirees' minds.
The stats are pretty sobering.
Yeah.
NHS England reported 7.6 million people on hospital waiting lists in 2025. And think about it, 60% of over 65s have chronic conditions, arthritis, diabetes, things like that. Getting timely care is crucial for their quality of life.
Right, and when you can't get that timely care through the NHS, what happens? People who can afford it are pushed towards private options, but that costs. A private knee replacement, you're talking £12,000 to £15,000.
Wow.
And that doesn't include extras like dental care, which often isn't covered, or mobility aids. Age UK points this out. It all adds up.
So then you look abroad, Portugal, for instance. A private consultation might be, 50 to 100 euro?
Yeah, compared to maybe 150, 200 pounds privately in the UK. Much lower.
And places like Thailand. They've built this whole medical tourism thing. High quality care, but way cheaper. Heart surgery for $10,000 instead of maybe $30,000 in the UK.
It's a different world, financially speaking, for healthcare in some places.
Which was a game changer for Jane, right, with her arthritis.
Absolutely. She could get affordable private treatment in Spain quickly, no long NHS waits. That made a huge difference to her day-to-day comfort.
Yeah, you can see why that would be appealing.
And what's fascinating here is how Brexit complicates things.
Yes. Let's get into that.
Before 2020, UK retirees in the EU had reciprocal health care via the EIC card. Relatively straightforward. But now, those agreements are mostly gone. So retirees face higher costs, or they need complex private insurance. It's actually pushed some people to look outside the EU, maybe to places like Thailand, where the healthcare market is just different, potentially more accessible without those EU-specific insurance hurdles.
Interesting. So Brexit's shadow looms large over these decisions, too. It's really reshaped the whole picture for retirees thinking of moving. Before 2020, it seemed so much simpler, didn't it?
Sure.
Freedom of movement, healthcare access.
Yeah.
You could just sort of go.
Exactly. Pick up and move to Spain or France relatively easily. Post-Brexit, it's a whole different ballgame. New visa rules, restricted healthcare access. It adds uncertainty, adds cost, like the 91 80-day Schengen rule. You can't just stay indefinitely anymore without a proper visa. Limits your time.
Right.
And getting those long-term visas, it can cost €500, maybe 1,000. Plus you need proof of income, lots of paperwork. It's a barrier.
And that hit Jane directly, didn't it? Because her daughter's in Barcelona.
Yes, her initial plan was probably quite straightforward, move closer to her daughter, but Brexit meant she suddenly had to navigate Spain's non-lucrative visa process.
Which isn't simple.
Not at all. It requires that financial proof, takes time. It wasn't part of her original, easier vision. And if we connect this to the bigger picture, there's another major Brexit-related issue, frozen pensions.
Ah, yes, this affects people outside certain countries, right?
Precisely. If you move to a country without a reciprocal agreement with the UK, like Thailand, Canada, Australia, your state pension is frozen at the level it was when you left or when you first claimed it.
So it never increases.
Yeah.
Even with inflation.
Never. It just loses value year after year after year. The Department for Work and Pensions says about 500,000 expat pensioners are affected. Some people who retired decades ago are getting incredibly small amounts, like £4,000 a year.
That's shocking, really.
It is. And it creates this odd dynamic where the policy actually pushes some retirees towards the EU countries where their pensions do get uprated because of those agreements. It's counterintuitive.
So, okay, despite the hurdles,
Yeah.
people are moving. Where are they actually going? What are the popular spots?
Well, Spain is still #1 by far.
Yeah, the British Embassy in Madrid reckons over 100,000 UK retirees were there in 2025. You get the climate, the lifestyle. And living costs, like we said, maybe 500, €800 a month. Plus those expat communities, especially somewhere like the Costa del Sol. Golf, social clubs. It's a whole scene.
Definitely. Then there's Portugal, also very popular, around 50,000 UK retirees. It has things like the Golden Visa, though that's changing, and generally affordable living, especially in places like the Algarve, maybe $600 a month for rent.
And further afield, Thailand.
Yep, Thailand's a big one too. About 20,000 Brits. Tropical climate, super low living costs, MBO suggests maybe $1,000 a month.
Wow.
Plus, you get a totally different cultural experience in places like Chiang Mai.
So it's not just about escaping the UK's problems, it's about what these places offer.
Exactly. This raises an important point. It's about the lifestyle benefits beyond just saving money. People are finding the time and, crucially, the affordability to pursue hobbies they put off for years. Painting, hiking, yoga, whatever it is.
Like Jane, starting her baking business in Alicante.
Perfect example. Selling cakes to local expat cafes. She said she just couldn't have afforded the setup costs or the space back in the UK.
That little business, that connection,
Yeah.
it adds so much to her retirement, doesn't it?
It really does. It's about finding fulfillment.
So what does this all mean then? Because moving abroad sounds great in theory, but it's obviously not easy. Relocation is, well, it's massive, daunting.
Definitely. There are real roadblocks.
Let's talk practical challenges. Visas, for instance, that Spanish non-lucrative visa, needing proof of nearly 28,000 annual income for a couple.
Right, for 2025. That immediately rules out pensioners who just don't have that level of income, even if they could live comfortably on less once they're there.
It's a catch-22.
It is. And then you have the human challenges. Language barriers are a big one. Spanish, Thai.
Yeah.
It can be really isolating if you don't pick it up, though the expat communities obviously help a lot there.
And culture shock.
Yeah, that's real too. Getting used to local ways of doing things, maybe a slower pace of life, dealing with bureaucracy. It takes adjustment, patience.
And the emotional side, leaving family behind. That AARP survey, finding 40% of expat retirees miss family. That's huge.
It is. Video calls are great, but they don't replace hugs, especially with grandkids.
Jane went through all this, didn't she? The visa stress, the language struggle, missing her grandchildren.
She did. 6 months for the visa. And she said leaving the grandkids was incredibly tough. But that expat community in Alicante really helped her find her feet, gave her that support network.
Yeah, that seems crucial.
And one more practical cost we shouldn't forget, Health insurance. If you're a non-EU retiree moving to an EU country, it's mandatory.
And that adds up.
Around €1,200 a year, typically. It's another significant budget item you have to factor in.
Okay, so let's zoom out a bit. This exodus. What are the ripple effects for the UK and for the countries these retirees are moving to?
For the UK, it's mainly economic and social. Economically, retirees take their pensions and savings abroad. They spend less in UK shops and services. The ONS estimated expat pensioners contribute about $5 billion less each year to the UK economy. That impacts local businesses, especially in areas where retirees might have lived.
My £1 billion.
Yeah.
And socially?
Socially, you see the impact on families. Grandparents moving away weakens those networks. That YouGov poll finding 1 in 4 millennials seeing less of their aging parents, that points to a real shift. And connect this to the bigger picture of the UK's aging population. We're expecting 20 million people over 65 by 2030. If more retirees leave, it could actually put more strain on the NHS and social care systems that remain, because the ratio of workers to retirees shifts.
Right, fewer people contributing, potentially, relative to the need.
Exactly.
And for the host countries. Is it all positive?
Well, it's a bit of a mixed bag, like you said earlier.
Yeah.
On the one hand, yes, the influx boosts local economies. That $2 billion figure for Spain's Costa Blanca from UK retirees is huge.
Supports local businesses, restaurants, services.
Definitely. But it can also strain local resources. You hear complaints, particularly in popular expat areas like Alicante, about rising property prices, sometimes making it harder for locals. Infrastructure can get stretched, too.
So finding a balance is key for them. Okay, let's unpack this. What about solutions? What can actually be done about this trend?
Well, for the UK, the potential solutions really target those root causes we talked about. Boosting the state pension up to that £14,400 minimum income standard would obviously help financially. Big impact.
But costly, right? You mentioned $20 billion a year.
Immensely costly. That's according to the Institute for Fiscal Studies. So it's a huge political and financial challenge. Then there's expanding NHS capacity. The idea of 10,000 new hospital beds was floated for 2025. That could ease waiting times, make healthcare less of a push factor.
Again, sounds good, but massive investment needed.
Absolutely. And reforming those frozen pensions for expats and non-reciprocal countries, the Unfrozen Pensions campaign is pushing hard for that. It would certainly help those already abroad and maybe make staying abroad more viable long-term for some.
Are there other, maybe smaller scale ideas?
Sure. Things like targeted tax breaks for retirees, maybe on energy bills, or council tax relief, as Age UK suggested, incentives to stay. And community programs like warm hubs are good, but they'd need significant scaling up to really make a dent nationwide.
And what about the host countries? Can they do anything?
They can look at making the process smoother for those who do choose to come. Streamlining visa applications, like Portugal did with its simplified retiree visa, can make a big difference to the stress and uncertainty of moving.
Makes sense. So looking ahead, what's the outlook?
Well, without significant changes in the UK, the projections suggest this trend is likely to continue, maybe even grow. Migration Watch UK projected potentially another 200,000 retirees could leave by 2035.
Another 200,000.
Yeah, so it seems that this exodus is set to remain a feature of the UK landscape for the foreseeable future.
Okay, so just to wrap up our deep dive today, it's clear the British retiree exodus is driven by this potent mix of factors: rising costs, squeezing pensions, real challenges accessing timely health care via the NHS, the ongoing fallout from Brexit, and just basic pension limitations in places like Spain, Portugal, Thailand. They're offering affordability, yes, but also a different lifestyle, maybe a better climate, which is really appealing. Stories like Jane's show us it's possible, but also highlights the very real challenges: the visas, the language, missing family. It's a huge decision with ripples felt both in the UK and abroad.
It really is, and I think this whole situation prompts a really important question for us to think about. In a world where people can move more easily and economic pressures are everywhere, what does it actually mean to ensure a golden retirement? And whose responsibility is that, really?
That's a powerful thought to end on. We really hope this deep dive gave you some valuable insights into this pretty complex issue. If you want more great information like this, you should definitely visit Mind Expansion Daily. And please, if you enjoyed this, like and subscribe to Mind Expansion Daily wherever you get your deep dives. It genuinely helps us reach more curious minds all over the world. We'd also love to hear what you think. Do you agree with our summary? Disagree? Let us know in the comments below. And hey, while you're there, tell us where you're listening from. We're trying to increase our reach worldwide, so it's always fascinating to see where our listeners are. Let's keep exploring the stories shaping our world.